in your life come up to you and say that, let me manage your account. Let me manage your account, right? So if you want someone to manage your account, you need to ask them the first question. Can I know what kind of risk you are taking for every trade you have, right? So if they say that I risk 10%, 5%, you better turn and run. Don't just walk, right? Because they're going to spend all your money, right? Now a fund manager who are really a fund manager who managing millions of dollars, they only risk like 0.5%, not even 1%. For us as a retail trader, I advise 1%. Why? Because usually our capital as a retail trader is small. If I ask you to recommend 0.5%, you say the money I make is so little, no fun, right? No excitement, right? So I suggest that you risk 1%, right? But for the fund manager, they actually risk 0.5%, 0.4%, 0.3%, 0.2%, even no margin. They trade without margin. That's what the fund manager trade. You're looking for a seat? Right in front. Alright? So you can see that when you want to trade, as your account getting bigger and bigger in future, I'm sure at one point in your trading life career, right, your trading account will definitely grow. Right? When the trading account grow, you should bring down your risk per trade. Right? From 1% to 0.8%, 0.8% to 0.5%. If you can bring down the 0.3%, that would be the best scenario, because you're losing trade, you don't even bother anymore. Can you see that? You should put yourself in that kind of situation, right? So in order to make it, to sum it up, right? If you do not want to lose all your money, you want to remove the fear of losing your money. For every setup that you spot, risk only 1%. Only 1%. No matter how good is the setup, we risk only 1%. Right? Just now this week we have the Bank of England. All right, we have this inflation came out from UK. Is it good or bad? Anybody who follow fundamental? What is the inflation report? You can't remember. Your fundamental trader cannot remember. You must remember, right? Anybody? What is the UK inflation report came out? Anyone who follow fundamental? Nobody. How about research student? Nobody. Wow, disappointing, man. No, by the way, do you know what is the inflation in UK in the first place? What is the target? What is the Bank of England the target inflation for the targeted inflation for UK? Do you know? 2%. Right? Most of the advanced economy, they have their inflation target, which is 2%. Right? UK last few months ago, their inflation is already surpassed the 2%, reached 3%. 3%. Right? So their target is 2%. But their inflation, the Washington newspaper, something like that, right? He says something. Go and read the article. It's already on my Facebook, right? I don't want to tell you everything, right? Now he basically said that, well, I don't think that it looks like we cannot increase interest rate, right? So if he said that, and next week, if we really don't maintain the interest rate and don't increase the interest rate, what do you think the British pound going up or going down? It's going down, right? So the biggest opportunity next week is to look to sell the pound cross. So I mentioned that in the Telegram already last night, right? Next week we are looking to sell all the pound cross, all the pound against dollar, pound against Aussie, pound against New Zealand pound, all the pound cross. Because if the Bank of England is don't go ahead and increase interest rate, you're going to see the pound start going down, right? Are we okay? Yeah. So you can see that's how we look for opportunity. Huh? So now this is let me come back to here first, right? So in order to not to lose your money, right? Remember, every time when you see a very high odds trade, even next week, I say that the odds is very high, like pound is going to be weakened. We are going to sell the pound, but it doesn't mean that you're going to put 3%, 5% and go and take a trade and pound, right? You are not allowed to do that. Risk only 1%, because if you are wrong, it's okay. 1% is wrong. Right, remember, trading is a probability business. There's no guaranteed outcome. Now, we say that the odds is very high that the pound is going to be weakened because of the Bank of England is unlikely to increase interest rate. Right, it's going to be weakened. Therefore, we are looking to sell. Right, but you do not want to, just because of that, you do not want to put in excessive risk, take excessive risk. Because that, if you take excessive risk, you're going to run into trouble of losing all your money. Are we okay? So the idea is, no matter how good is the setup, right? No matter how good is the setup, you still risk 1%. All right, okay, yeah? Let's move on, yeah? Now this disclaimer you need to read, right? You on your time. This is something I add on, right? After the feedback from you, right, Dennis, right? Now, if you risk only 1%, right, I can tell you, you can never lose your account. Now, if you lose your account when you actually trade in your trading career, right, then this is your fault because you're not following the rules. Okay? If you risk 1%, you can never lose your account because the moment you lost more than, let's say, 8 trade, 10 trade, you should immediately stop trading and call me up and we have a coffee chat, right? You cannot lose your account, right? So if you lose your account, it means there's something wrong with you because you never follow our rules of 1%. Okay? Now, this we want to cover, right? Part 1 today, we talk about the global economic outlook, and then we end of the day, we will go through the process, how to create a trading plan. Very important, right? Now, usually I don't talk about how to create a trading plan, put it on black and white, right, in workshop. But after I talk to so many students, especially from Philippines, right, and I realized that they don't have any trading plan. They just trade based on what they feel, what they like, right? Even they've gone through the program already, right? So we want to focus how to create our own trading plan, step by step, right? Very important, okay? So tomorrow, the part 2 they will cover tomorrow. And these are all, tomorrow is all based on a lot of charts, right? Today is all on fundamental, okay? Right. So far, okay? Are we okay? Am I talking too fast or not? Okay, yeah. Okay. Now, why the price move? Why the price move? Now, price move up and down has nothing to do with the technical trend line being removed, moving average cross, RSI, overbought, oversold, and MACD diversion. Nothing at all, right? Now, out there market, if you are trader before, you realize that you follow indicator, it never works. Sometimes work, most of the time it doesn't work, right? Why? Because the price movement has nothing to do with the indicator you are following, right? Now, then why the price move? Price move is because there's a news flow that hit the market, and when the news flow hit the market, it can create a certain sentiment, right, and certain expectations. Now, when the big guys, the big institutions, right, when they look at this news report, right, they digest it and they realize that this report is bullish on the currency pair they are trading. So they are likely to, what they're going to do is they are going to go in to start buying, right, and that will cause the price start going higher. Right? So the market movement up and down is only because when the big guys enter the market. It has nothing to do with our indicator. That's the first thing we need to understand. Right? Indicators are all secondary. Right? We have to understand the only reason why price start to move is because of the big institutions start to enter the market. Okay? Are we okay so far? Right? So therefore, right? Therefore, you can see that in our methodology here is we want to follow the big guys, right? We say that big guys always win in this business. If they always win, I want to follow them. If they are buying, if they are bullish, I also want to be bullish. I want to buy as well. If they are bearish, I want to sell as well, right? That's what we say, right? Because they are always a winner, right? Therefore, then in that case, how can we copy and trade alongside with the big guys, right? The big guys will not give us a hotline and tell us that they're going to buy and sell, right? Then how can we know whether they're going to buy and sell, right? So, like I said, in the most of the preview I share, right? If when the big guys decide coming to buy and sell, usually they have to based on certain market information to make their trading decision. Am I right now? You don't expect a hedge fund manager walk into your office in the morning and suddenly they say, "Oh, let's go today go and sell the Australia. That tomorrow let's go and sell the pound." They don't do that, right? They have a certain idea why they want to sell the pound or why they want to buy the Australia. They have certain idea. And all this idea come from where? Come from certain information, right? So now, if we are a retail trader, right, we also look at the same information where the big guys are looking at. The same information, right? Can we say that now we know what the big guys are thinking? If we are looking at the same information where the big guys are looking at, can we now say that we know what these people are thinking? Now, if we know what these people are thinking, we know quite accurately what are they going to do, whether they're going to come and buy and sell. That's what we mean by we understand the behavior of the big guys. Alright, so we always want to follow the big guys. What are they thinking? What information are they looking at? Right? If they're looking at the information, we look at the information as well. Okay, so that's why we say that we trade alongside with them. Right? Now, the big guy would never say that one day, the hedge fund manager, right, the hedge fund, They never say in the morning they walk into the office and they look at their chart whether their indicator cross or not, give their signal. They will never trade that way, right? Who trade that way? It's only the retail traders trade that way, right? If you are already a retail trader, most of the time when you want to trade, what do? You open the computer, see whether your indicator alignment or not, and you start buy and sell based on indicator tells you, right? But this is what the retail trader trade. But imagine the big guys don't trade that way, and the big guys, if the big guys are always a winner, they don't trade that way. Then we should not trade. Then we should not trade that way anymore. Do you understand? Right? For those of you, I think that you have attended a program, but when you trade, I'm not sure how you trade every day. Do you look at the straight go to the chart? Yeah, you. I can recognize you.
Usually, very seldom look at the fundamental. Every time see price supply and demand, then waiting for the price to place the demand.
It's not enough, yeah. You are just waiting, trading or technical is not enough. You're going to have a lot of losing trade. Sometimes you're wondering why it doesn't work, right? So you must. That's why a lot of students, why sometimes they go through the program, right? When they want to trade, they still go back to their old style of trading, right? They refuse to learn the difficult one. Now understand that to understand the fundamental and get a trading idea, it's not easy. And then people tend to go back to what is easy for them. But what is easy for you doesn't mean that you can make money. And you end up, you're struggling throughout your trading career, right? So, because understanding the fundamental is something that is not easy, right? That's why a lot of people shy away from teaching fundamental. They all teach technical. Technical is very easy. If the technical doesn't work, you just blame on the indicator. It doesn't work, right? But fundamental, sometimes the news can be good, but the result can be the opposite. This make it very challenging. Right, but if you really understand the fundamental, now trading becomes so easy, right? Now let me ask you, right? Today, what do you think is the strongest currency today? Based on your understanding, which currency is the strongest? Based on your understanding, Australia is strongest. US is strongest. What else? Huh? CAD is strongest. Okay, why? Must back up with the reason why. Remember our 4W. What to buy, why to buy, right? So when you say Australia is stronger, why Australia is stronger?
Because of the China.
Because of the China market. What happened to the China market?
Recently the GDP not there.
So it means that you never follow the news correctly, right? China economy has slowed down, right? China economy has slowed down. China information is all manipulated, right? China economy, if you read carefully into China market development, their economy has slowed down. Right? So when the China economy slow down, they will definitely require less commodity. Then Australia is going to get, it's not going to benefit from that. Right? So Australia is not strong. Australia, we are going to sell in Australia, that's it. Right? Now, you said the US is strong. Why US is strong?
Because most of the economies are based on the US. So whenever there is any change across the world, only the US dollar which affects throughout the world.
Yeah, you affect throughout the world, correct? US dollar affects throughout most of the currency pair because most of the US is being traded as is the most traded pair currency, right? But it doesn't mean US is always strong just because of that, right? You say that who say Canadian? Who say Canadian is strong? Why Canadian is strong? Why? Huh? I cannot hear you.
Because oil price is increasing.
What? The oil price. Yes, very good. Oil price is very high right now, right? Oil price is very high, and it's going to affect Canadian dollar. That's why I say we are in my I think Telegram or my webinar. I say I'm not going to sell the Canadian, right? Because the oil price already break above the high, is waiting for a breakout, right? So all we need is some kind of catalyst to drive the oil even higher, right? Catalyst of oil to drive the oil even higher can come from where? Come from war, right? So now where is the geopolitical situation right now potentially break into war, develop into war? Where? Syria over already, what? Turkey, right? If you follow my Facebook again, you realize that Turkey is the fresh point right now, right? Turkey is up against the whole world right now, right? Go and read the article to find out, right? So the next war is likely to break out is Turkey. Against who? Against all the European country, against US, right? Right now, Russia is using Turkey as a proxy to fight against the other European country. Why? Because of the natural gas. Now, right now, Germany, Italy, they get their natural gas from where? When during cold weather. Get from where? Russia. Exactly. They get from Russia, right? And right now, before that, a couple of years ago, right, there is a discussions to supply, to let Greece to supply their natural gas through the Syria to Germany, to Italy. Now, do you think that Russia want that to happen? No, definitely they don't want, right? That's why they are using Turkey to block Greece, right? So you can see right now there are a lot of problems out there in that region, right? So you can see that Cyprus is also another problem. Have a lot of problem with the Turkey, right? They have discovered a lot of natural gas around in their region, in Cyprus area, right? And they start to team up with the consortium with the France, with Italy, with Greece, with US, right, to explore the natural gas there. And Turkey has sent their warship to monitor. They say that this is this belongs to me. It doesn't belong to you, right? You're not. It's illegal for you to come and export and do the exploitation here. So now there's again a fresh point there, right? You can see that US even sent in the 7th Fleet or 6th Fleet, right, to that area to support their I think Exxon. I think it's the Exxon. The oil giant, was it? Exxon had also joined the consortium to explore. So the US sent the 7th Fleet to protect their commercial. Can you see that? So you can see that that's going to be a thing that we have to pay attention, because if there's a crisis over there, we are going to see oil start going up, right? When oil start going up, what are the currency that they're going to affect? Canadian, because Canadian produce a lot of oil. You understand, right? Canadian's going up, right? US dollar is going down. Okay. Okay. So if you now, how about euro? Do you think euro is strong? Do you think euro is strong? What do you think? Nobody mentioned euro. Huh? What do you think? Do you think euro is strong?
It's been strong for a while.
Huh? Why no?
Not recently. Not in the past 2 weeks.
Huh? Why? Euro. How about anybody disagree with him? Anybody say euro is strong? Okay, why euro is strong?
Germany is strong. Germany has positive plus.
Okay, Germany of course is positive all along. Yeah. Okay, what else? Now, as a whole, do you think euro is strong? Huh? Why not strong? Not strong. Should be, yeah. Okay, euro is strong, right? Let me show you why euro is strong. Now, right now we can see that most of the economy has picked up, right? You can read the articles, right? And therefore, all the central banks start moving away from low interest rate. They start to become we call it tightening up the monetary policy. Means they start to increase the interest rate, right? We have observed that US have increased interest rate a few times. Right now, their current interest rate is 1.75%, right? We have observed that Canada also upped the interest rate a few times. UK also up interest rate, right? And at the same time, these are the countries that they always increase interest rate, right? Now, when we also look at the quantitative easing, you know what's quantitative easing, right? Anybody do not know what's quantitative easing? It's printing money. Yeah? We have one chapter talk about quantitative easing later, right? Now, the country that involved in quantitative easing, the first country is US. They did three QE. They print 3 times QE, right? And then followed by Eurozone, ECB, followed by Bank of Japan, right? These are the 3 countries have activated their quantitative easing. Now, US has already ended their QE. They start to normalize their interest rate. Now, when you read the article, normalize the interest rate, it means that they start to move away from the low interest rate, right? They start to increase interest rate, right? Now, the other 2 big central bank, which still in the QE, is the ECB and Bank of Japan, right? Now, between these 2, Bank of Japan, the governor came out a few times and they say that, well, we are going to remain at a low interest rate as long as it takes, right? They are not going to do any change. They are going to continue to pump in money into the financial system. Why? Because their economy is not doing well. They need to have a very low interest rate to stimulate the economy. So to them, Bank of Japan say, we will stay at the low interest rate as long as it takes, right? Now, when you look at the ECB ECB at the last year December, they said that in January they start to reduce their QE by to 60, I think it's 60 trillion, I think, yeah? Is it 60 billion? Billion, I think, 60 billion, right? Every month they are going to buy 60 billions of bond, right? Every month until end of September, right? So their quantitative easing from Eurozone is end of September. They will review again whether they will continue the quantitative easing or they should stop the quantitative easing. Now let me ask you, when they stop the quantitative easing, is that a bullish to euro or bearish to euro? Bullish to euro, because they stop supplying euro currency to the financial market. When the supply goes down, it is bullish to euro, right? So you can see that right now we have two. If you look at these three central bank, big central bank, US has already ended the quantitative easing. They start to increase interest rate. Bank of Japan, they say that we will maintain our QQE for as long as it takes. They have no plan to end at all, right? Eurozone, it say that in this year January they reduced their QE to 60 billions, right? And they said their program will end at end of September this year. And after that, they will review the situation, whether they need continue to maintain the QE or they reduce the QE even further, right? Their interest rate in Eurozone is what? What, 100% right now? What is percentage interest rate in Eurozone? 0%, right? So you can see right now, the Euro right now interest rate at 0%. Their QE is about to terminate in end of September. After that, they look at constitution. If the economy start to pick up, they will really end. If not pick up, they might continue to end the QE, right? So right now, can you see right now, Eurozone and the US, we are at a different economic cycle right now. US has already ended the QE. They start increase interest rate a few times. Eurozone have not even ended the QE yet. Now you just imagine the moment they end their QE, right? And the interest rate is still at 0%. Therefore, for Eurozone to ECB to increase interest rate, the potential is huge, right? For the up movement is huge, right? So can you see right now, Euro is more bullish than the dollar right now? Because in financial market, the market do not based on what is happening right now, right? And they start to trade. They are looking always what is going to happen in the future, and they start trading now, right? Financial market is a discount mechanism. They discount what's likely to happen in the future now, right? So do not look at right now. Yes, right now US dollar has increased interest rate. It looks like US is strong, but that's not how the market moves. Market is looking at what is the potential in the future. Now you see, US dollar already end the QE. ECB haven't even end QE yet. They said that end of September we will consider to end the QE, right? Now once they end the QE, is this going to be bullish euro or bearish euro? Bullish euro. Now what happens is after they end the QE, their interest is 0%. They have a opportunity to up the interest rate without cause any problem with the economy. But can US continue to up the interest rate? Cannot. At one point in time, they had to stop and cut interest rate. Can you see that? So can you see that by looking at the big picture here, are you bullish euro or bearish euro now? Bullish. So because of the big picture, we are bullish euro. Therefore, you can see that when we have our objective is always to buy the euro. Now buy euro at what price? When the euro is very high, example, we see all the good news come out from euro. Market already expect euro is going to be high because of the QE is ending in September, because the interest rate still remain at 0 in euro, right? So the market already start to buy euro because this is they buy in the future, right? So right now, if the euro start going up so high, I want to buy the euro. Now, are you going to buy when the euro is very high? No, right? Just like when you want to invest in property, you only want to invest in the property when the price start coming lower, right? Likewise in trading. I want to buy the euro, right? Based on what I just shared with you. The QE is ending in September, right? The interest rate is still 0%. There's good chance that they can up interest rate many more times compared to US, right? Now, if I want to buy the euro, I want to buy as low as possible, as low as possible. But what can cause the euro to come down? News, right? Example, last week we have some negative news come out from Eurozone. What is the news?
I think it's an election.
Not in the election is way long time ago, over already, past already, no problem. We have the Euro inflation report again, right? The economic report came out from Eurozone is the industrial production missed the expectation. Now this is very important. If the industrial production missed the expectation, it means that it will affect the what? The GDP, right? It will affect the GDP. Now if it affect the GDP, right, it means that in future Euro will get be weakened as well. Now not only the industrial production missed the expectation, their inflation also start coming down. Can you see that? These are all the drip news that going to weaken the Euro, push the Euro down. Can you see that? And if you are a news trader, what you usually do is you start selling, right? But when the price comes down, for the big guys, for us as a trader, a big institution, they say, I know what I'm going to do with Euro. I'm going to buy the Euro, but at the right location, means as low as possible. So all the news that comes out will push the Euro down to the level that we feel very comfortable, that we want to buy. Do you understand? So you can see, as a fundamental trader, right? At all times, we know exactly what are we going to do with the currency pair. Are we going to buy the currency or are we going to sell the currency? If I'm going to buy the currency, we know exactly where we want to buy. Now, the question right now is, what can cause the Euro come down? It's all the daily news that we read in the Forex calendar. Do you understand? So when the Euro eventually comes down to the level we want to buy, we just buy. You understand? Yeah? So can see that by understanding the big picture becomes very, very important. Okay? Yeah? Now, okay, part one, okay, does that mean? Okay, basically you can see that in part one, we discussed the global fundamental, right? This is done by analyzing the economy and the politics in any country and what is currently happening in the world economy, and this offers trader a very clear idea when deciding which currency to buy and sell, right? The first thing as a trader, when we want to look for opportunity, is not to go to our charts. Forget about going to your chart because you're wasting a lot of time by going to your chart first. You used to look at the overall picture, put up your world map, right? If you have a world map, right? And you say now, which economy is doing well, which economy is not doing well? How about politics? Now, which are the areas have problem in potentially going to war? Now, you understand all this, then you know where to buy, where to sell. Now, the next thing is, when you look at the economy, what to look at? Because economy is such a big word. What to look at? If you are not studying in school about economy, how can you know what to focus, right? So we focus on three things, only three things. We look at the growth of the country, of the economy. Is there any growth in the economy? We look at the inflation. We look at the interest rate. Only these three things we focus, right? Now, if you only focus on these three things, you know exactly what the central bank is likely to do, right? Because now let me ask you: when the economy has grown, right? Do we expect inflation? Yes. Now, when the economy has grown, economy has inflation, what do you think the central bank? What do you think the interest rate is likely to become? Up or down? Up, right? Now, when the interest rate go up, what do you think the currency going up or going down? Why going up?
Because we want to control the economy.
No. Okay. So now you understand this formula. Every report comes to you become simple, right? Now, in this one day, like I said, we spend one day talking about the fundamental, right? Now, a lot of experts in those people who went to university study 4 years, right? So to become an economist, expert in all this, right? So in this one day, I'm not trying to train you to become an expert in all this, right? What I'm going to try to attempt to do is we go to the point, what to focus, how to make use of information to make money for us in forex. That's all. I'm not trying to train you to become an expert here, right? So don't ask me a lot behind the fundamental reason why, right? Because I would not one day can never equal to 4 years people study in university. Okay? So now and I try to make it as simple as possible for you to understand, right? Now, so let me ask you, now, if there's no growth, the opposite, when there's no growth in the economy, will there be any inflation? No inflation, right? So when there's no inflation, inflation is going down, keep going down, right? What do you think the central bank is likely to do? They have to stimulate their economy. Am I right now? Because when the economy become no activities and went into the depressions, right? Deflations, no activities, right? In order to bring the economy back up, right? The central bank need to stimulate the economy. Now, one way to stimulate the economy is to do what? They have to bring down the interest rate to as low as possible, so that when people go to the bank to borrow money, they encourage people to go to borrow money and spend the money, and that's how they want to stimulate the economy. Do you understand? Now, when the interest rates start to go down, what happened to the currency? Is it going down or going up? Up or down? Down. Right? Why down? Why down? Just now we said interest rate goes up, the currency goes up. Why? We need to understand why.
Because people tend to sell their currency because their interest rate is too low.
People tend to tell, okay, you're quite close there. Now, remember, in the financial market, who are the big player? Institution, hedge fund, right? Now, investment bank. Now, all these people, they are in this business to do what? To make money. And these people are very, very sensitive to yield, the yield, ROI, right? They are looking for now which part in the world, which country are offering them a higher yield, higher return, higher interest rate, and they will move the money into that asset class, to whatever asset that offer them a better yield, better return. So now, when the central bank start to increase the interest rate because of their economy has inflation, because of their economy start to grow, right, and they increase the interest rate. Now, do you think they will attract a lot of big investors, hedge fund, to move their money into the economy to enjoy a higher interest rate, higher yield? Yes or no? Yes. That's the reason you can see that when the interest rates start to go higher, right, most of the time the currency will appreciate, right? On the other hand, when the central bank cut the interest rate because your economy is no good, right? You can see that these people who they say, now I'm getting very, very little yield from this economy, I better look for somewhere else and put my money into. They start to move their money out from the US, right? When US economy go into the recession. Now, do you think that the institution will put their money in the US and get very, very, very little interest? They are not going to do that. They start looking about, well, which part of the world? Now, emerging markets have a better growth, better risk. I better move my money there and get a better yield. Can you see this is how they move the market, capital flow, moving the market around? So all we need as a trader to understand is, where is the capital flow right now? Flowing to which region, which currency? Because if the capital start to flow into the emerging market out of the US dollar is going down, emerging market currency is going up. Right? Do you understand? Okay? So that's why you say, as to understand whether the currency is going up or going down. First of all, when we look at the economy, look what, economy is so big, look what? We look at, is there any growth in the economy? Now, is there growth in the economy? Definitely inflation start to pick up. Inflation start to pick up, interest rate, central bank likely to increase the interest rate. That's it. Interest rate go up, currency go up. Interest rate go down, currency go down. Simple is that? Simple enough, right? So now the question right now is, how can you know there's growth in the economy? How can you know there's inflation in the economy? Then we look at all the economic report. Example, the PPI, CPI, retail sales, employment status, which we'll cover later. PMI. Do you understand so far? Okay, so you can see that the whole thing, to understand whether the capital flow from what region, in and out, right? We focus on what the future interest rate going to be for that particular country. Right? In other words, we try to predict what the central bank is likely to do to the future interest rate. Because if the central bank, example, we know that example, what else? UK is likely to increase interest rate because the inflation reached 3%. Right? Their target is only 2%, but inflation is only 3%. They already well above their inflation target. Right? So very likely the Bank of England will have to increase the interest rate. So when they increase the interest rate, what happened to British pound? It's going higher. Do you understand so far? Okay? Yeah. So okay, part 2 we'll talk about it tomorrow. We'll list about technical. Now, so in the financial market, they are basically divided into 3 groups of people, right? Retail. We have the retail people like us. We are the trader. Institution are the investment bank, the hedge fund. We have the central bank. Now, among all these 3 parties, right, the biggest one, of course, is the central bank. Now, central bank has the right, legal right to print money, right? Even the institution would dare not go up against that, right? So that you can see that the institutions are always look at the central bank and they try to predict what the central bank policy, whether the central bank is likely to increase interest rate in the future or cut the interest rate in the future. So that's what the game is all about. It is always the institution try to predict what the central bank is going to do with their future interest rate. And they try to, if they think that central bank is going to increase interest rate in the future, they start buying that currency already. So therefore, in future, when the price start going up, they will take advantage and start selling and take a profit, right? So it's, in this market, all we need to understand, and we know that institution in this forex market, institution, the big guys are always the winner. And we want to trade alongside with them. We want to trade alongside with the big guys, right? So now, and we know that the big guys will never tell us whether they are bullish or they are bearish on a certain currency. They will never tell us, right? But so in order for us to trade alongside with them, so all we need to do is what? We look at the central bank. Is the central bank going to increase interest rate in the future or cut the interest rate in the future? Why you want to do that? Because that's what the big guys are also looking at. Do you understand right now? So how can we know whether, so now you can see that the institutions are looking at the central bank and then they try to predict and they try to speculate is whether the central bank, example, whether the Bank of England is going to increase interest rate next week or not. They try to speculate, right? And if we are retail trader, we also do the same thing. We are looking at the Bank of England, are they going to increase interest rate or not? So now, can you see that now we are looking at the same information right now to make our trading decisions, right? So we know exactly what the big guys are going to do next, right? So now, how can we know whether the central bank is going to increase interest rate or cut interest rate next week? How can we know? We look at the UK economic data, right? Imagine, right? If the UK economic data come out from, example, the retail sales is good, and we have the CPI, which measure the inflation of the economy, is also getting better and better. We see later. I'll show you where to get all this report, right? And we look at the PMI. The factory output is okay, getting better. So if all the economic data shows that for a few months, 3 months, it's all show good result, what do you think UK economy is it doing well or not doing well? Doing well. So if UK economy is doing well, it means that there is a inflation. There's growth, there's inflation. Now there's inflation. What do you think the Bank of England likely to do with their future interest rate? They're likely to up the interest rate. So if they likely up the interest rate, and that's exactly what the big institutions are speculating, and they start to buy the British pound, right? And we also want to start to buy the British pound because we are looking, we know what we are also speculating whether the Bank of England is going to increase interest rate or cut the interest rate or maintain the interest rate. Do you understand right now? We are trying to, based on the economic information that we receive every month, and try to speculate whether the central bank is going to increase interest rate in the future or cut interest rate in the future or maintain the no change. We try to speculate it, that's all. Alright? Okay, so that's why we say, among the three parties, we always look at this. Because the big institutions also look at them. Right? Therefore, we look at these people, they have to speculate the future interest rate and we adjust our positions. Okay now? Yeah? Now, in this business, right, the professional always win, right? We cannot beat them, right? So we must join them, right? Whatever they see, we see. Now, our advantage, our edge is not knowing where the price is moving up or down. Our edge is developed because we know the behavior of the big guys, right? Now, when people ask you, do you know the price is going up or do the price is going down? We can never tell. Nobody can predict whether the price is going up and down. Sometimes people tend to ask, Benny, what do you think? Do you think US dollar is going up and down? No, that kind of question is difficult to answer. I say, I don't know how to answer you, right? But I say, you're a forex trader, how can you don't understand, right? But that's how we develop our edge. Our edge developed because we know what the big guys is going to do. If the big guy is going to buy, we are going to buy. The price is going higher. If the big guy is going to sell, we are going to sell because price is going down, lower, right? Okay, so do not try to predict where the price is going. We always try to think what the big guys is likely to do. Now, if you think you're trading along that line, then you are in good hand, right? Do not try to predict where the price is going because it's very, very difficult to predict where the price is going accurately, right? Now, the role of central bank, right, is to now The role of central bank is to implement the monetary policy and to provide a consistent growth and manage the level of inflation within the economy. That is the main goal of all the central bank in the world. Right? That is the main goal, right? And therefore you can see that if the central bank feel that there's an increase in consumer spending is needed to stimulate the economy, when they see there's no growth, they look at their retail sales is getting worse than the previous month, worse than the forecast. They look at the factory output is worse, right? They look at the PMI is worse. They look at the what else? What else we have? What other report we have? Huh? Home sales is down, right? So if you see all the economic data come out, it's down, right? So the central bank said, okay, it's time for us to stimulate the economy. Now, how are they going to stimulate the economy? One very effective way is bring down the interest as low as possible to become a free money. That's why after the 2007, 2008 financial crisis, right? Lehman Brothers bankruptcy, everything, right? You can see the US economy going to nosedive, right? So how the central bank want to avoid get the US out of the recession? They start to print a lot of money. They initiate their first quantitative easing. Quantitative easing means they print a lot of money and supply into the financial market. When you have so much money supply, US dollar supply into the financial market, what's the value of US dollar? Down. They want to make sure the US dollar is down and they cut the interest rate to 0% to make sure that it's a free money. That's why that time we always hear that it's a free money in the market. Why? Because the bank, the businessman can go to the bank and take up a loan and pay nothing. Pay 0.1, 0.2, 0.5% interest. It's a free money, right? And you have a lot of big institution, corporation, go to the bank and take up a loan that pay 0.1%, 0.2% and go and buy back their own share. And the share start going up, we call it buyback share. Can you see that? Because that's what we mean by free money. When we say free money, it doesn't mean the government really give you free money. Free money means free interest rate, right? So because of the economy is going to recession, right? So the central bank, they want to get the economy out of the recession. So what they do is, they bring down the interest rate as low as possible, make it free to the people. So encourage them to go to the bank and take up a loan and start spending money. Do you understand? Right? That's what the role of the central bank, right? So you can see that there were short-term loan become providing a loan to the commercial bank, and usually result banks start to lower their interest rate they charge and make the borrowing less costly for consumer, with the hope that to lead to the increase in the overall spending, right? Now that is when the economy is not doing well. Now what if when the central bank feel there's a tightening of economy is needed, right? It means that they feel that inflation start to rise, just like Bank of England, right? When inflation hit 3%, which already well above their 2% target, Bank of England come out and aggressively increase interest rate by 0.5%. Not even 0.25, they increase 0.5%, right? Because they think that they need to tighten up the economy. So when you see an article, they say that the central bank, Bank of England is tightening up the economy. What does it mean? It means that they have become very, very hawkish. They want to increase interest rate as fast as possible, right? So tighten up economy means that they need to increase interest rate. Sometimes you see article, you read articles say the central bank are very hawkish, hawk, right? It also means that they are worried about inflation. They are likely to increase the interest rate very soon, right? Okay, so that's what the role of the central bank. Are we okay so far, right? Why I talk about all this? Because in forex, everything is about interest rate. It's about what is the future interest rate likely to be. That's why we focus about interest rate, right? Because when the future interest rate is going up, the currency is likely to go up. If the future interest rate is going down, the currency is likely to go down. That's it. That's as simple as that. That's why we focus a lot on the interest rate, the future interest rate. Right? Now then you may be asking, is the current interest rate make any difference? Yes. Now if the current interest rate, let's example, if at the moment US interest rate is giving you, the yield in US interest rate is, let's say 3%, right? In Japan it's 0.02%, right? You will see that the capital start to flow into the US out of the Japan, Jane. Because Japan only offer at 0.02%. US offer you 3%, right? So the current, in forex, we say that the future interest rate is important, expectation of future interest rate, right? Because that's what the price start to move. But the current interest rate also important because that will affect the capital flow as well, because the big guys will move their money into the currency that offer them a better yield. All right, we'll cover that later as well. Okay, so in forex, it's all about interest rate. Do you understand so far? Okay, now you need a break soon. Do you have a break?
Yes,
Okay, so let me sum up what I'm going to share with you before I go for a break. Now, let me finish all this before I go for a break. Now, monetary policy, right? The monetary policy defined as the way in which the central bank and the Federal Reserve in US manage the volume of money circulating in their respective financial system, right? Now, interest rate is one of the most effective tools the central bank and the Federal Reserve use to exercise their monetary policy and control the liquidity within their economy by changing the cost of borrowing, right? When there increase in interest rate, people start to less loan being given out, right? So you can see that interest rate is a very effective tools where the central bank use to manipulate change their monetary policy, right? When interest rate goes higher, the currency will goes up. Interest rate go down, currency goes down, right? Space for you to see. Okay, this is something like for example, when the central bank need to slow down the economy, right? They start increasing interest rate. When interest rates start to go up, lower economy will lower the economic growth and it will slow down the inflation, right? The opposite, right? If central bank need to, if there's a recession in the economy, if the central bank need to stimulate the economy, they will cut the interest rate. When they cut the interest rate, they will stimulate the economic growth because more people go to the bank and take up a loan. They start to spend money, and therefore they will increase the inflations. All right. Okay, this one we can talk about later. Okay. This one we'll cover that about after the tea break. Yeah. Now, so far, any question? We'll cover. So to sum up what I have covered this morning, right? In the market, remember there are three parties here: central bank, institution, and people like us. Okay. Now, since the institution are the big guys are the one who always win in this business, we want to follow them. If they are buying, we want to buy. If they are selling, we want to sell. So how can we follow them? Right? We need to look at what information they are looking at. They are looking at the central bank. What are they looking at? Central bank. They are trying to speculate. Is the central bank is going to increase the future interest rate or cut the interest rate? And we also do the same thing. So how can we know whether the central bank is going to cut the interest rate or increase the interest rate? We look at the monthly economy report. We will cover later. Okay? So far, are we okay? So all we need to know as a retail trader is, when we want to start to trade, we look at the overall the landscape, the different central bank. What is their economic policy? And we will see opportunity there. Okay? Yeah? No question, we will break. We have yes. Yeah.
Are you saying basically we should be following the control of the hot market?
Yes. Yes. You're right. Now, you might be asking, now today, the Federal Reserve, when we say Federal Reserve, we are referring to what? Who? The US Central Bank, yeah? When Federal Reserve already mentioned that in 2018, they are going to increase interest rate 3 to 4 times. 3 more times to go, right? So right now, their interest rate in US is already 1.75%. 1.75%. They are the highest so far, I think. It's on par with Australia or on par with New Zealand, right? And they say that this year, they are going to increase 3 more times. In 2018, they are going to increase 3 more times. Every time is 0.25%. So by the end of 2018, what kind of interest US is going to be? 2.5%. Will be the highest among all the G8 currency. Can you see that? Right? So then you say, Benny, how come they want to increase interest rate? Why the US dollar still remains so low? There's a diversion. Can you see that? Why you say that when the central bank likely to increase interest rate, the currency will go up. But why the US is still remain very, very low? Can you see there's a diversion? Do you know there's diversion right now? Do you know US dollar is very weak? You know, right? Now, why US dollar is very weak while the Federal Reserve openly and come out say that we are going to increase 3 more times this year and 2 more times in 2019. So you can see here by 2019, first quarter, first half a year, they are going to increase 2 more times. So that means that by the second by mid-year of 2019, U.S. interest rate would have become 3%. It's very, very high already. Can you see it? That's the central bank interest. That's not even talk about the bank interest rate. This the central bank interest rate, 3%, right? So now why US dollar is very weak? Do you know why US dollar is very weak? Huh?
Donald Trump why weak currency?
Yes, because Donald Trump, he want a weak currency. Right? Usually when interest rate go up, we expect interest go up, the big guys will start buying. But right now the big guys don't believe central bank can increase interest rate. You can see that we have three parties here. Right? The central bank, the Federal Reserve came out and said that this year we are going to increase 3 more times. Next year, up to midterm, we are going to increase 2 more times. That means, in other words, Federal Reserve is going to increase another 5 more times interest rate, right? But the institution don't buy it, don't believe. They say it's impossible. You can increase so many times because why? The institution, the bond market, they are looking at the U.S. economy. They look at U.S. economy right now. Your inflation is already reached the top. Is already start to come down, right? You have so much loan right now. You have the student loan. You have the housing bubble. You have what else? What other loan you have? Auto loan, right? You have double deficit, twin deficit in US. How can you continue increase interest rate 5 more times? Who are going to pay all? You know, imagine when you increase interest so much, how much money you have to pay on the interest alone, right? You are going to kill your own economy, right? So you can see the big guys. Let's say these are the central bank. The central bank over here, the central say, we are going to increase interest rate. The big guys over here say, I don't believe because I look at the economy. It's impossible. You can increase so many times. So they refuse to buy into the central bank can increase interest rate. Can you see that? They say that it's impossible, right? So that's one reason why US dollar remain low because the big guys don't believe it. Don't believe that central bank can increase interest rate so many times, right? Now at the same time, Donald Trump is very important because right now today the forex is not just moved by economics, right? Many years ago it just moved by economics, so it's very easy to understand. Nowadays the market, right, is financial market is not only moved by economics, by the economic growth. It also moved by politics. Politics have played a very, very important part today, moving the market up and down, right? And when Donald Trump, this is his second year. His first year become a president, he has tried to handle the healthcare, which he failed. The tax cut, where he succeeded. What else he did on the first year? What he did? I mean, basically these are two things he tried to do, right? On the second year, at the beginning of the year, right, he tried to focus on the trade deficit right now. So this year, I believe that he's going to talk a lot about what? Trade war, tariff with all the trading partner. Why? Because he wants to tackle the twin deficit by the US, right? Because that is one of his campaign promises. He wants to bring down the trade deficit. So to bring down the trade deficit in the US, the only way that he can achieve that is to do what? To encourage more export from United States and less import from overseas, right? So how to do that? To make sure your currency is as low as possible. So he actually start currency war actually, right? Now, a few years back, when all the G10 financial head they meet up, right? They say that nobody allowed to do currency war. Means that you are not allowed to depreciate or devalue your currency to make your product more competitive. Nobody allowed to do that, right? But after Donald Trump became a president, anything is possible, right? He break all the rules, right? He started with currency war, right? So he said to him is, if he want to achieve to bring down the trade deficit, this is the only way he can do to bring down the dollar as low as possible, right? And therefore to make the American make product more competitive and to export more. Now, when the US dollar becomes so low, lost value, right? For American to import goods from China, from Germany, from Korea, it become more costly. There were less import. So that in a way they try to bring down the deficit. Can you see that? So you can see that starting from when he was become a president, 2017 January, until now, US dollar have already lost more than 10% against all the major currency. Can you see that? And he will continue to remain the low interest rate and not interest rate. Currency. So you can see that that's the reason why the US dollar is continuing to be very, very weak. And even though the Federal Reserve want to increase interest rate, there's a diversion. Later I'll show you some chart after the break, right? So this eventually, this one have to come back. The correlation between the US interest rate and the US dollar has already break, right? Already broken. But it has to come back. It's either the interest rate has to come back down or the US dollar has to go back up. But looking at the current, right now who's in control, I don't think that US dollar, Donald Trump like to have a strong US dollar. So chances are, we are going to see the interest rate start to come back down. Later I'll show you the chart, right? Do you understand so far, right? Okay. So if no questions, I think, any more question? Yeah.
What is the consequences if the divergence keep on the gap even wider?
What's the consequence?
I mean, the interest rate keep on going up and the currency became very low.
Well,
this is a big gap, right?
Yeah, this is a big gap. So what's the?
Well, what will affect the whole economy of the US?
Well, if your US dollar continue to remain very weak and even weaker, you will basically make other economy not competitive, right? And of course, you can see that the US will start to export a lot, right? The deficit will go down, right? But if your interest start going up, I don't think the interest can start going up because you will come up to a certain point that you will start to hurt your own economy, right? And you can see that when there's no growth in the economy, you can see that the interest will start to come back down again because the central bank need to because central bank their role is to stimulate the economy, right? When the economy right now is picking up, so they say that now the economy is picking up, inflation is rising, therefore they have to increase interest rate. But they cannot forever go up because the interest rate forever go up, they'll come to the point that the economy cannot take it anymore, right? And so the economy start to go down, the interest rate has to come down. They cannot forever go up. Okay? Okay, let's have a break of 20 minutes, right? Now, during break times, one thing I forget to mention just now, right? Now, during break times, let's have a break and chit-chat with everyone. Don't just chit-chat with me. I also need to have a break time. Because using the break time, people start to come forward and talk to me, and I don't have break time as well. Alright, so let's have a break together. Right? So by the way, Eileen is the back. Eileen, can you stand up so people can know you? All the SM, can you stand up please? So people can look at you. Samuel, right?